been a decline in demand in the property market. One of the contributing factors for this is the recent interest rate hike. The repo rate was recently upped to 4.75%. Meanwhile, the residential rental market is strengthening. Let's discuss the recent trends in the commercial and residential property market with John Luce, an FNB property economist. John, thanks so much for your time this evening. So can you tell us what the market has looked like in the past 6 to 12 months as we came out of those serious COVID lockdowns and people started to look at the potential for buying a home?
Well, on the residential side, on the home buying side, it went particularly well from late 2020 in response to those interest rate cuts early in 2020. And there was a surge in demand for home buyer demand, and correspondingly a weakening at the time in the rental market. Tenants took a hammering, the incomes took a hammering from the lockdowns, and many aspirant first-time buyers left the rental market and went to the home buying market. So the rental market went down. That was initially after lockdowns. On the commercial side, we've had a steady rise in demand in all three major sectors: industrial, retail and office, up until recently. But I think what's happening now, this is my perception, we haven't got hard data yet, but with the interest rate hiking, which sped up a little the other day, I think that we've probably seen some slowing in demand, buyer demand for office space and retail. I'm not sure about industrial yet. I think that's got some legs still. And then on the residential side, slowing home buyer demand, but a strengthening rental market as a portion of aspirant first-time buyers postpone their home purchase and hang out in the rental market for longer. So that's supportive of the rental market. So that's the broad trends of the market segments, I think, at the moment.
Looking at potential investment opportunities, where are they? Not just in terms of first-time home buyers, but also for property investors.
Well, always tough to know to tell people how to invest, but I mean, I think that at the moment probably the likely outperforming residential market is to be found in, if you take big regions in the Western Cape and down in the Southern Cape and up the West Coast. I think that province will outperform the others in the near term, because there's quite a big semigration surge, I perceive, at the moment of skilled labor to that part. So I think that's a sort of major regional outperformer. But I think in Johannesburg, in recent times it's been stronger on the more affordable end. But I think if you can pick pockets of excellence, it might not just be affordable end, might also be these high-class enclaves, the likes of Waterfall and so on, where because of security and safety concerns, more people often choose to live. So I think that some of the classy, sort of upmarket, high-quality nodes that have been developed in northern Joburg, such as Waterfall, I think could possibly be outperformers in this part of the world too.
Perhaps you can corroborate some data. I might have the wrong end of the stick, but someone told me that more international buyers are moving to buying properties in Johannesburg as opposed to Cape Town, where Cape Town had once been the destination of choice for international buyers. That's now switched around. What do those trends look like at the moment?
No, I have heard that perception from someone, but it's difficult to confirm that. We don't have too much data for international buying at the moment. And I think the world is in a bit of a tough place, because not only here, but across the world, interest rates are going up and financial markets are taking a bit of pressure. So I'm not sure that foreign buying in general would be all that strong at the moment in South Africa. But no, as to whether it's switching from Cape Town to Joburg or so, I really can't say I've experienced something like that.
Let's talk very quickly about the lost middle, perhaps not just your first-time buyers, but those who haven't been able to buy a property due to economic circumstances, financial circumstances. They're just under that bracket and they're forced into rental, what looks like possibly for the rest of their lives. Escaping that gap, that lost middle of South African earners, how do they move up into that buying segment of the market where banks can look at them confidently and say, yes, we might not have looked at you in the past with confidence, but now we are going to give you a loan? What do they need to do?
It's a tough one. I mean, the theory is simple, but in practice, obviously, when you've got income pressures and surges in inflation at the moment, it's always going to be tough for certain income earners to get it right. But I mean, it's really all about keeping a clean credit record for one. That's the first priority. And then, I mean, secondly, it's in rentals, you can do that for quite some time, is sort of cutting your coat according to your cloth and living frugally and building up that savings for that deposit. Banks at the moment, in many cases, do offer up to 100% loans, but it's always better, from a financial sustainability point of view. The bigger the deposit you can put down, the better. But there's no magical recipe. I mean, it's higher rate of savings and the problem in South Africa at the moment is there's just not enough job creation in what is a pretty stagnant economy. So, there is going to be a sizable chunk of the workforce that remains outside the formal housing market ownership, I'm afraid.
Well, thank you so much for your insights. That was FNB property economist John Loos.